Welcome back, everyone. I hope you're doing well. And in this video, we're going to take a look at two companies that Ark Invest has been heavily buying into over the past few weeks. Both of these stocks have fallen over 20% from their highs, and Ark has been heavily buying the dip on these two growth companies. So in this episode, we're going to go over their current financial position, the company's operations, and their future expected growth over the next few years. And Ark Invest focuses on disruptive innovation in the companies who are planning to change the world. And they have been one of the top asset managers over the past 5 years. And if we take a look at their flagship fund, ticker ARKK, it has grown by 145% over the trailing 12 months, and they've been grossly outperforming for the past 5 years. And tens of billions of dollars have been flowing into ARK ETFs because investors are believing that Cathy Wood and her team will continue to deliver market-beating results over the next few years. And before we take a look at the first stock they are buying, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z Investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. So please hit that like button, subscribe for the daily videos. And the first stock that Ark has been heavily buying into as of late is ticker U, which is Unity Software, who currently trades for $100 per share, and the company has gone through a major decline from a $172 high all the way back to the $100 share price, and the company currently trades with a $28 billion market cap. So this is one of the leading software companies, and we can see they have now fallen over 41% back down to their current level. And right around this $100 range, Ark has been heavily buying to this company. And we can see from the beginning of March 2021, on the second day, they owned 5.6 million shares of Unity. And then up to this current point in time, so over the past 6 weeks, they have purchased over 3 million shares, and their current position sits at close to 8.7 million. So if we take an average share price of $100 times that 3 million recent purchase, Ark has invested more than 300 million into this company over the past few weeks. So they've been heavily buying the dip in this market-leading software name. And Unity's platform allows individuals to create real-time interactive content, and you can use their system to build 2D, 3D, VR, games and apps, as well as different manufacturing, cinematic, and construction processes. And this platform allows creatives to really do anything they want, and Unity has been expanding at such a fast rate because they are completely neutral. What you create on Unity can be distributed across 20 different platforms, including all of the major game consoles, Android devices, and even iOS App Store. So for the creatives who want to create different apps, games, or services, Unity is the market-leading software on the market right now. And we can see that in 2020, they brought in $772 million of total revenue, which grew 43% over the 2019 number. And every single quarter, the company's total sales continues to grow, with over $220 million in the last 90 days of 2020. And the company's total sales are broken down across their three main business segments, which include their Operate Solutions revenue coming in at 60%, their Create Solutions revenue making up 31% of the total top line, and finally, the remaining 9% comes from their strategic partnerships and some other revenue. And this company, Unity, has also shared some very incredible metrics that explain how powerful their platform really is in the mobile gaming space. And in 2020, 71% of the top 1,000 mobile games in the fourth quarter of 2020 were made with the Unity platform. 71% of the top 1,000 were powered by Unity. That's incredible. They are the market-leading position in the software space, leading and developing these mobile applications that are growing at such a terrific rate, and that's just absolutely insane. And the monthly active users who consume content created or operated with Unity reached 2.7 billion users per month in the fourth quarter of 2020, which is up 63%. 2.3 billion users and consumers are using an app that has been powered by Unity, and that's just nuts to even imagine. And their applications built with Unity were downloaded on average 5 billion times per month in the fourth quarter, which grew 41% over 2019. So those three metrics show how powerful and how fast the Unity software system is expanding year over year. And for the full year of 2021, they're projecting between $950 and $970 million of total revenue, which represents growth between 23 and 26% year over year. And if we take a look at their balance sheet, they are in a very healthy financial position. At year-end 2020, they had around $2 billion of total current assets compared to short-term debt of only $500 million. So right now they have a current ratio above 4 and is very sustainable over the short term, and they can sustain their short-term losses over the next few years. They have total assets at $2.6 billion and only $634 million of total long-term liabilities and very little long-term debt sitting on the company's balance sheet at only $98.5 million. So overall, Unity is in a very strong financial position and they can fund their growth over the next few years. And we can see the company's projected to grow their total revenue in 2021 right around that 26% mark, followed by another 27% growth in 2022, where they're expected to hit $1.24 billion of total sales. And their earnings, or their bottom line, is projected to grow by 18% over the next 3 years. And we can see from their current position, the total top and bottom line is expected to improve and continue to grow exponentially all the way up to 2025. And for the next 5 years in the future, Yahoo Finance analysts are projecting 26% annual share price appreciation for this big software company. And at their current level, after the major dip, they currently trade for $100, which is well below the 12-month expectation of close to $140 per share, and the company is considered a buy, coming in with a 2.4. So Unity Software is definitely an interesting company, and after their major decline of over 41%, they are definitely trading at a much more attractive level. And like we saw, Ark is heavily buying the dip into this name, and they believe going forward, they will continue to grow. And I think the fact that Unity dominates and controls the mobile game development space, and that's only going to continue to expand as more individuals transition to smartphones and different apps, I think Unity will continue to grow for many years going forward, and it's definitely an interesting growth play on the market right now, and clearly Ark sees a ton of potential in this fast-moving and fast-expanding software platform. And now if we continue on into the second company that Ark has been heavily buying into as of late, we have ticker DKNG, which is DraftKings, the leader in the online sports gambling market, currently trades for $58 per share with a market cap of $23 billion. And this company reached a high of $72, but has now fallen 20% back down to their current level. And Ark Invest, starting in March 2021, initiated a position in this company, and in total, over the past few weeks, has purchased over 3.4 million shares of this online gambling brand. And if we take the average cost of $61 per share times the 3.4 million, that means Ark has invested over $200 million into DraftKings since the beginning of March 2021, which is no small amount, even for a fund as large as Ark Invest. So they definitely see some potential in the fast-growing online sports gambling market, which is nowhere near their total addressable market. And at this current point in time, only 27% of the total US population has access to legal online sportsbooks, and only 11% has legal access to online iGaming. So the market is nowhere near its full potential, and over the next few years, it's expected to drastically expand. And of the states that currently have everything legalized, DraftKings is operational in 12, which is the most out of all the companies in the online gaming sector. And right now, DraftKings owns 30% of the market share in terms of revenue and holds the leading position in this ever-expanding sector, which is incredible to note. So right now, if you want to own the company that's winning the race, DraftKings is the brand in the online sports gaming and iGaming sector. And right now, they own 30% of the sportbook market and 19% of the iGaming market as of Q4 2020. And taking a look, right now, I believe they will continue to dominate because their app is the highest rated among all of their competition, with a 4.9 for the daily fantasy and a 4.8 for their sportsbooks on the Apple App Store. And they're higher above all of their main competitors. and the average time spent on the DraftKings app is at 6.5 minutes, which once again is well above their second competitor in FanDuel, which is only at 5.1. So right now, users on the platform are enjoying their app, it's highly rated, and they're spending more time on DraftKings system compared to the competitors, which only shows that they're doing a terrific job of retaining their users for as long as possible. And we can see total revenue has been expanding at a 31% CAGR over the past 5 years, and is projected to cross over 700 million throughout the year end of 2021. And going forward, they're expecting around a 30% annual revenue expansion for the next 5 years in the future. And we can see at this current point in time, the company does have a very strong balance sheet with around $2.2 billion of total current assets and short-term debt at only $554 million. So once again, another company with a current ratio right around 4, so very sustainable over the shorter term. And the company has over $3.4 billion of total assets compared to total liabilities of only $742 million. And something I love to see is the fact that DraftKings has paid off all of their long-term debt, and that currently sits at 0 on the balance sheet, which really shows me how strong their overall financial position is at this current point in time. And going forward, they're projected to grow total revenue by 66% in 2021 to over $1 billion, then another 40% in 2022 to over $1.44 billion of total sales over the next year. And their total earnings are projected to grow by 35% year over year, and we can see from this current point in time, the total top and bottom line are only projected to grow exponentially all the way past 2025. And regarding share price, analysts are forecasting 30% annual share price appreciation, which is absolutely massive, and the current target sits at $73, which is well above the current level that it sits at right now for $58 per share, and DraftKings is considered a buy, coming in at a 2.2. So definitely another fast-growing company that just hit the public market. It has fallen 20% from its highs, and is another brand that Ark Invest has been heavily buying into over the past few weeks. So now we're going to wrap up the video. We went over 2 companies that Ark Invest has been heavily buying into as of late, and of course that was DraftKings and Unity Software, 2 growth plays on major declines, and if you want to take a look at these companies, do your own research, and they may be worth a buying opportunity over the next few weeks. So I want to thank you for watching to the end. I am the Gen Z Investor, and every single day we talk about the stock market, going over different stocks you can buy, and any major market news. So please hit that like button, subscribe for the daily videos, and I will see you in tomorrow's episode.